Hi there, Serial Trader here. I just want to do an update on the major US indices and starting with the shorter term Elliott wave patterns here on SPX. Now, since the last video, we did get a clear 5 waves down, or at least you can count it clearly without overlapping. So you got a 1 down, 2 up, then you have your third wave, and within the third wave, 1, 2, 3, 4, 5. So that counts cleanly as 5 within the third. And then you could say that you had this fourth up of one larger degree, fifth down to new low. That could be 1 or A, and then we just had this very brief either wave 2 or B up, and it was brief in time, although the amount of price it actually retraced from that pivot there was right around the 50% retracement. So it's certainly acceptable as far as the price movement, but it just seems a little short in time compared to the previous impulse wave down, but technically allowable. And now we're possibly already in this third wave down or C wave down. Now this actually isn't my preferred count, but I just wanted to highlight it as a potential count. And if this is the count, if this is the correct one, then we're just falling apart here in our next leg down after just this brief, although sharp rally on Friday. Now the other count that I kind of want to lean towards a little bit more, or give it a little bit more emphasis at this point, is this. And that's where we have a 1 down, 2 up, 1, 2, 3, 4, 5, that was our third wave. And then we had an A, B, C expanded flat wave 4, and that didn't overlap, as you can see with this wave 1. And now we've had that stab down in a fifth wave to today's lows, and that's possibly, the extent of the move. And maybe that's just this overall move down is for 1 or A. And now we'll have a larger and more time-consuming corrective rally, an ABC up of some sort. And if that is the correct count, then we'd be looking at some fib retracements from the top up here to today's low. And I'll just show the common ones there. 382, 50, 618, 786. So certainly if that's the case, then we'll get a pretty good rally here soon. And there's certainly some other technical reasons to maybe go with this count as opposed to the other one that seemed a little bit more immediately bearish. And that's that, okay, so this is an hourly chart. So on the hourly RSI, we're doing a bullish divergence. And that's where we're making, higher lows in RSI despite lower lows in price. So showing kind of a weakening momentum of this downward action. And so that's one strike for this count, or one positive for this count. Now on the 4-hour chart, I'll also point out we got legitimately oversold. So lowest reading here on this bar was 28 and change on the 4-hour RSI, and we just started getting a slight move towards the end of the session there upwards, but nothing substantial yet. But if you look before, so over here, 4-hour RSI didn't even get quite as low as we got today. It was at 32, so almost 30. And obviously that led to a nice move up. And then even over here at the December lows, which were significant, granted we got quite a bit lower as far as the reading. We got to 19 on the 4-hour RSI, but that wasn't extreme reading, and obviously we led, significantly higher from those levels. And there's other examples over here. Again, we got to 19. That seems to be the lowest we've seen, certainly in recent memory. And then we had at least a bit of a bounce there before going lower again. So the fact that we're already at this early stage here, we're already in the oversold territory in 4-hour RSI, I would suspect that this might be, the more preferred count, and we should be, if you're short here, probably a good idea to take some of that off the table and tighten your stop up. I certainly wouldn't enter a short here, and potentially looking to actually put on a long trade to catch this, what at this point I would consider to be a corrective wave up. I'm not expecting a new high after this pretty clear impulse to the downside. So yeah, this is kind of the one I want to run with for now until it's proven otherwise. But there's also still that possibility here that we're just already in a more trending wave down and it's not done yet. But I'm certainly leaning towards this one, and we shall see as the week progresses. Okay, now I'll go to the thinkorswim candlestick chart, and starting with SPX here. So we had some initial support here on this 50-day simple moving average on Friday and Thursday, certainly on a closing basis. But now we've broken cleanly through that, and it wouldn't be such a far cry to get down and test this 200-day moving average at 27.75. And that, we've already done some fairly significant technical damage here. Certainly, the momentum is broken as far as this overall up move from December, and the question is, will this just be a corrective pullback that eventually finds a higher low, at least above the December low, and then leads to higher highs, or is this something bigger? And we don't know yet. That's why I'm just looking at the shorter term wave patterns and otherwise, and just going with that. But certainly the mood has changed from that relentless rally that we've been in. That's definitely been broken here, at least on some time frame. Okay, so that's SPX. Yeah, clearly below the T line, 3T line, closing towards the lower end of the range on the day. That's certainly a sign of weakness. Getting closer to the oversold territory here on this daily oscillator. So again, if you're short, start taking some off the table, tighten up your stop, and don't enter here as a short. I wouldn't recommend it as an entry area, but certainly scouting a long entry at this point. That's what I'm looking for. Okay, now on the Dow Jones Industrial Average, the Dow actually having more technical damage here than the S&P. We've already gotten below and closed below the 200-day moving average as of today, so that's quite significant. And the Dow basically right at this previous support level we had here, and that was at 25,208. So today we got as low as 25,222. So slightly higher than that previous support level as of today's intraday and closing action. But we'll see if that holds tomorrow. Might be a good place here for the Dow to bounce, being that we're at the 200 and that previous support level. But we'll see. It will be a pretty significant sign of weakness if we just slice right through this and ignore this previous support level and the 200 and just keep going. That would be a somewhat surprising level of weakness at this point. Okay, NASDAQ composite. Well, we've lost to 50 on the NASDAQ composite, so that's certainly negative. 200 is a bit of a reach away, but it wouldn't surprise me to go down and touch it. We do have these previous support levels we're still currently above, and on the composite we're at 75.79 and 75.82. So those are kind of our short-term support levels to look for if we do stab down a little lower tomorrow. If those don't hold, then it's likely we go and touch this 200 at least. Alright, NASDAQ getting closer to the oversold territory on the daily oscillator, but again, not quite there yet. Okay, and the NASDAQ, as far as percentage changes, certainly seems to be leading to the downside, and just as it leads to the upside, it does the same in the other direction, right? Alright, so on the VIX, so VIX set a higher low here on Friday, and that was at 15.57 intraday. And the uptrend in VIX still intact, at least this little shorter term uptrend. And we're still kind of staying above these previous resistance areas, which, if that's bullish for VIX, it's not bullish for equities. It's actually bearish. But there's one thing I will mention. So despite today making lower lows on the indices, VIX made a lower high compared to Thursday's high there. So that's a bit of a divergence that favors a bounce there on stocks, at least short term. And we'll get into this a little more in depth on the VIX VVIX tool. So yeah, as you can see here, after this confirmed sell signal on SPX, great follow through at this time. Some of these previous signals didn't, but this one was a good one. And just from when that signal activated, we're down 130 plus points. So that was definitely a good sell signal. But at this point, so a couple things I'll point out here. So this tool doesn't just work for sell signals, it works for buy signals too. And it works much the same way. So I'll point out a couple things. So we look for a divergence between VIX and VVIX. Okay. So here VIX made a higher high, but in the same time here, VVIX made a lower high. So that showed a divergence between VIX and VVIX. Basically VVIX not confirming the continued strength in VIX. So there was that. And now we're also showing some other action. And that's that we're setting a lower high in VIX. And now at this point we're comparing VIX and VVIX versus SPX. And lower highs in VVIX despite lower lows in SPX. So now we have a bullish divergence, if you will. So lower highs on VIX and VVIX after also having their own divergence, again where VIX made a higher high and VVIX did not, and now lower lows in SPX. So we're certainly ripe for a bounce here. I think if we were really already in that either third or C wave down, we'd likely still be making higher highs on on VIX and VVIX, and we're not. So this also has me leaning towards that other wave count. And just to refresh, it has me leaning towards this, where we've just put in a fairly significant bottom for either 1 or A, or we're close to doing so. And we're looking for this larger and more time-consuming corrective rally. But again, we'll see how the rest of the week unfolds. But this is, certainly this tool is giving the potential for a buy signal to form. Now, we're starting to get below this red moving average on VVIX after having the divergence. So that's step 1 of the buy signal. Step 2 will be getting above the blue moving average on SPX, although that's fairly far away, although the moving average is coming down quickly to catch up with price here. So we'll see tomorrow if this materializes, or do we just keep dumping. Anyway, that's the update for now. Serial Trader signing off.